This week, Ben and I will talk about USDA's adjusted crop numbers, along with some discussion around the future of the congressional decisions, maybe around the Farm Bill and some potential ag impacting export tariffs. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, as always, joined by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing well. How are you this morning, Will?
Doing all right. It's a bright, sunny Tuesday morning, gearing up for the National Association of Farm Broadcasting convention coming up in Kansas City tomorrow. Flying up for that, so pretty excited.
That's good. Yeah, that'll be nice. Have you been to the new airport yet, or the terminal?
At MCI,
hmm
no, I'm not.
Yeah, I'm getting ready to fly through my first time here in a couple weeks as well. In Columbia, we're closer to St. Louis's airport, so we tend to fly either through Columbia or St. Louis. But have an opportunity to fly through MCI in Kansas City, and excited to see the new terminal. So
Yep.
these are the things we get excited about these days.
These are the post-college excitements of life.
That's right. Yeah, that's right.
But anyway, talking about some exciting things, we're going to give a quick price rundown. We did see some increases in some key areas, but also a few losses on the board. So looking at December corn for this year, up 14 cents at $4.30. December 25 corn up 5 cents at 4.45. January 24 soybeans up 25 cents at 10.22. That November 2025 soybean contract up 10 cents at 10.45. Soybean oil on a cents per pound basis up 2.58 cents at 48.14. Soybean meal by the short ton down $4.50 at 295.10. That 2024 wheat crop for December down 3 cents at 565. July 25 wheat down 6 cents at 598. That December cotton contract down 24 up 0.24 cents per pound at 69 cents. And then that deferred cotton contract for December 2025 was flat on the week at 72.72. And then that West Texas Intermediate crude oil contract down $3.68 at 68.04. So Ben, there's some, across the board, if you look at the board as a whole, some spread adjustments, but I mean, really slight positives, slight losses. What's your picture takeaway from the changes on the week?
Sure. So we saw the biggest increases in the old crop market now, which would be our 2024 crop. Part of that was due to USDA's adjustments on the WASDE report for November, and that really kind of tightened supply a little bit and gave that old crop a little bit of a boost.
Yeah, so looking at that tightening picture, we saw just a slight tightening on the corn side, about 1%, but then a 3% adjustment to soybeans. So really, and we kind of saw this reflected, this really boosted those soybeans a decent amount, with really the only losses in the complex coming on the soybean meal side. So going forward, as far as the soybean complex goes, what kind of picture does this paint for the future of the market?
Sure. So you're right. So on the soybean side was probably the biggest changes. I think that was the area that had the biggest opportunity to change, which sounds kind of crazy, but there was a lot of interest in that soybean yield number. The national soybean yield came in at 51.7 bushels to the acre. That was down almost a bushel and a half from the month prior and a full bushel below where the trade had expected it. If we look at where the declines came, pretty much across the Midwest, we saw deterioration in those soybean yields. Illinois and Iowa had some pretty strong deterioration, even though Illinois is still at a record 65 bushel per acre crop. Indiana also at a record at 62 bushels per acre. Missouri down to 47 bushels an acre now. So that was down almost 8% month over month. And so that was kind of the big change, right? Like you shrink the yield, that's going to lower supply. We saw production for U.S. soybeans down 121 million bushels month over month. That was almost 100 million bushels below the average trade estimate and below all pre-report expectations as well. So you take that into consideration of that big of a decline in production. We see a little bit of reduction in the use categories for soybeans. At the end of the day, soybeans were lowered 80 million bushels down to 470 million bushels. So still ample supplies.
Mhm.
That's not anything that's going to get me super, like bullish to $12 prices in the soybean market. But it's certainly, a tighter picture than what we were talking about just a few weeks ago. Season average price unchanged at $10.80.
Yeah, well, and then Ben, we saw some adjustments on some of these other key crops. Looking at like sorghum, I think we saw a raise overall across the board, and then with cotton, I think it was kind of mixed depending on the state you were in. But on certain states, it was left unchanged or slightly higher, I want to say. What's the outlook or picture there on some of these other crops like sorghum and cotton?
Yeah, so let's start with sorghum and then or Milo, and then we'll go to cotton if you're okay with that. Yeah, the thing with sorghum this year that's kind of interesting that's been flying under the radar is we've seen some really strong moves both to the upside and to the downside in that sorghum yield category. I'll remind you, it was a couple of months ago, I think it was 14 bushels to the acre is what was shaved off the national sorghum yield. We've kind of been adding back to that a little bit, increasing that yield. So this month yield up just over 3 bushels per acre, almost 61 bushels per acre for a national average yield. That increased production. We did see a little bit higher feed use as a result of that, but then at the end, ending stocks were roughly left unchanged, just up 1 million bushels. On the sorghum picture, it's really been the production number, trying to get a handle on what we produced here in the United States. On the demand side for sorghum, it's the export market that has really disappointed so far this year, at least compared to last year, at least compared to where the USDA currently thinks it's going to be. We're running well behind, and there could be an opportunity or it could be pressure eventually to lower that export number and increase ending stocks for the sorghum side. So yeah, that's kind of my comments on sorghum. You want me to go to cotton?
Yeah, let's tackle cotton.
Okay. Yeah. So cotton, again, this was an area to where maybe we were, expecting some of the changes that we saw. We didn't know if we'd get them this month, but certainly the picture was kind of playing out for reduced exports, and that's what we got. So national average yield for cotton was left unchanged, but we did see that export picture lowered 200,000 bales, down to 11.3 million bales. That was the only change, and so ending stocks were increased, and the season average price was unchanged at 66 cents per pound. That's a upland equivalent, upland cotton equivalent. So, I guess again, I kind of very similar to the sorghum side to now the cotton side. If you look at both those commodities this fall, we've had some pretty big changes in the U.S. production side. For sorghum, it was drought. For cotton, it was those hurricanes that came through, and so some pretty big changes on the production side, but then on the consumption side, it's all a matter of how much is China going to import. Sorghum, China buys a lot of our sorghum because it can come into the country under their tariff rate quotas. For cotton, Southeast Asia just as a whole consumes a lot of cotton, and given how dominant export use is in the cotton market, that's a big market for us as well, and really drives some of our market potential here. So the two commodities that aren't grown really in the same area. I'm going to guess that there's not a whole lot of producers. Well, actually, I take that back.
A little overlap.
What did you say?
Just a little overlap, not a lot.
Yeah, I was getting ready to say in the panhandle of Texas and some of the southern plains, you probably do have some producers that grow cotton and sorghum, but two crops that have actually materialized very similar this year in terms of their supply and demand and just kind of fundamental outlook moving forward.
Well, Ben, talking a little bit on the export side for these crops, especially on the cotton side, you talked about some of the tariff potential and the key quotas there for China. Looking forward, maybe as a longer term thing, some of the discussion points with the new administration coming in, or I guess returning, is a look at the shift in focus on how trade might work within the agricultural sector, some potential tariffs. Ben, do you have any expectations or thoughts on the market's reaction longer term to some of these potential tariffs?
Yeah, I guess I do. I have thoughts. I think everybody always has their thoughts and opinions.
Yeah.
Yeah, I think I would tell everybody to pause for just a second and remember the marketing phrase of past performance does not, indicate future results or future returns, right? And in a lot of ways, I think that applies to policy. Now, sometimes you can, the only thing we have to look at is past
data.
Yeah, past data to kind of influence, where we might go. And I realize that this is kind of ironic coming from an economist where we use historical data all the time to try to figure out, what's going to happen in the future and for, decisions or, prices and production in the future. So I realize that's kind of a little ironic, but I guess the reason I'm saying all this is like I have no idea what's going to materialize in the next few months, few years. Um, all we can do is say, here's what's happened in the past. Here's what key people in the administration have supported in the past and might shape going forward. But policy is just one of those things that's always in motion. It's always
Always
fluid,
fluid.
and
Yeah.
I'm not really sure what to expect moving forward. I will say though, we have heard a lot of talk in the campaign and even now after the election about increasing tariffs on countries and especially imports from other countries around the world, all countries, but in particular China. It's not the tariffs that we impose that are concerning. It's potential retaliatory tariffs by all these countries on our products that we export to them, and that adds another level of complexity of trying to figure out what other countries are going to shape their policy to look like.
Yeah.
As it relates to agriculture, I'll give a couple of examples of how this could be both positive and negative, I guess. So, if you're a soybean producer and you're sitting here thinking about soybean prices over the next few years, one of the concerns might be you're not exporting as many whole soybeans into the Chinese market. Last time they slapped tariffs on whole soybeans and that reduced our demand. There was other things happening in the market in the world at the time. But that happened, right? That was a thing. The second thing, or the other side of this coin for the soybean picture, is you have reason to be optimistic about domestic demand. We've been importing a lot of used cooking oil to support renewable fuel production, and the administration has also talked about putting tariffs and limiting the imports of used cooking oil, which could increase soybean oil demand. And so maybe we're not exporting as many whole soybeans because of tariffs, but we also might see a little bit more demand for soybean oil as a result of less cooking oil being imported in the country. So that's my long-winded answer, Will, about I don't know if we can fully grasp what this could look like.
Yeah.
But certainly there's a lot of moving parts here.
Yeah, well, it's one of those things where, policy decisions have rippling effects, that kind of echo, across sectors. So, you look at maybe a decreased ability to export certain ag products. Maybe that leads to the creation of more soy crush facilities in the United States, leads to other things. So it is a little bit of a balancing act there. But Ben, last thing I want to dive into today is looking at the potential for Farm Bill. We're moving into the lame duck session now between, what the election we just had and January 3rd when the lame duck can happen here. So do you see any potential for this Congress as one of their last ticket items to look at the Farm Bill, or do you think this is going to get posted at the next congressional delegation?
Yeah, so I don't. I guess it'd be my raw.
Don't expect anything to happen.
Yeah, I don't expect it to move forward. Now that being said, it could, right? There's the possibility and potential for it to be out there, but I don't expect it to.
Yeah.
Congress is going to have to quickly start addressing, the budget again. As a reminder, earlier this fall, Congress passed a stopgap measure that pushed the budget bill into December and January, and so they're going to have to address that here in the lame duck session or duck session. My guess is that that takes up all the oxygen for the time being. The concern I have for Farm Bill is if it doesn't get done here during the lame duck session, I think it becomes pretty hard to do it in 2025, at least not until the end of 2025, because the first half of the year is going to be dominated by tax policy discussions. And then all the other things in incoming administration, not just this one, but there's always things that incoming administrations want to tackle through the legislative branch. And so
Yep.
there'll be a lot on the plate all at once. And I see the Farm Bill kind of getting caught
Being
up a
pushed
little
down the
bit.
line a little bit. Yeah.
Yeah, just kind of getting caught up in the shuffle of everything. And um, I don't know what the Farm Bill eventually looks like. You're hearing that a lot from me today. I don't know, right? Like I'm just being truthful here. I don't know what a farm bill looks like moving forward, or at least this next farm bill. If we can't get something done this year, we're probably looking at a longer term extension, so maybe a 2-year extension instead of a 1 year or something along those lines. And then looking to make big changes in the farm policy sector. And so again, I don't know what this all looks like. I just simply say that I think it becomes hard to get something done here in the lame duck, and then I think it gets hard to get something done in early 2025.
To really surmise, there's a lot of uncertainty, and it's really impossible to predict how things will exactly play out.
That's right.
All right, Ben, well, looking into the rest of this week, what should farmers and ranchers be paying attention to that could move the markets?
Yeah, so a little bit quieter of a week than what we had last week. I feel like there was a lot of,
Yeah,
I feel like there was a lot of stuff last week. So a couple of things. So on Wednesday, let's start with Wednesday of this week. We get the consumer price index report, measure of inflation. Then we get the producer price index, another measure of inflation on Thursday. All of our USDA reports are delayed a day because of Veterans Day on Monday. And then Friday, we have that National Oilseed Processors report to get an idea of what October soybean crush looked like by NOPA members. So that's kind of I think, as I look ahead, a quieter week, but still some substantial stuff that I think is going to be, important. Those inflation numbers will be really interesting. We didn't even talk about the Fed today. Yeah, we didn't even talk about the Fed, but the Fed, I think, is closely watching these numbers to see if inflation's continuing its decline or if we've seen it turn around and started to increase again. So it'd be interesting to watch those come out this week.
All right. Well, Ben, thank you for all your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.